Hi, I'm Wade Johnson, partner of Cutcher Neale Wealth Management, and I'm joined today with my colleague and portfolio manager, Ryan Thompson, to give you a market and portfolio update for the September quarter. Despite a few bouts of market volatility, the third quarter of the year ended with healthy returns across most global share markets. Interest rate cuts from several major central banks, including an outsized 0.5% reduction from the US Federal Reserve, boosted market sentiment. These reductions were driven by continued progress towards lower inflation, which supported asset prices and pushed bond yields lower. During the quarter, the US S&P 500 rose 5.9%. European markets also delivered solid returns, with the UK FTSE 100 up 1.8% and the Stocks Europe 600 up 2.7%. Japan's Nikkei, however, lagged behind, falling by 3.5%. Economic developments led to a downward shift in interest rate expectations. In the US, futures markets saw interest rate pricing drop from the current rate of 5% down to 3.75% by mid-2025. In Australia, the economy continued to show signs of strain, with GDP growth of just 0.2% in the June quarter. Despite this, job gains exceeded expectations, keeping the unemployment rate at a lower 4.2%. Headline inflation fell to 2.7% within the RBA's target range. However, inflation was artificially lower due to government cost of living measures, such as energy rebates. As a result, the RBA maintained its hawkish stance and signalled that no reduction in the current cash rate of 4.35% would occur this calendar year.
The Cutcher Neale International Share Model delivered a solid performance during the quarter, with our stock calls driving returns. US homebuilder DR Horton gained 30.5%, benefiting from its competitive pricing in a high interest rate environment. Deutsche Telekom also added 12.7%, thanks to strong customer growth in its mobile segment, while Walmart rose by 15.1% following a better than expected result. Gold miner Agnico Eagle gained 19.3%, supported by rising gold prices which hit new record highs during the quarter. The Cutcher Neale Positive Impact Model also performed well. Trend Micro led the way, gaining 40.7% after exceeding earnings expectations and implementing effective cost controls. Investor sentiment was further bolstered by the company's share buyback program and takeover interest from multiple parties. Other contributors including Orsted up 20.5%, Securitas up 23.2% and Enel up 14.4%. Turning now to the Cutcher Neale Australian Share Model, which, thanks to information technology and industrial companies, was our best performing portfolio during the quarter. WiseTech Global was a standout performer, rising 36.9% after reporting impressive 2024 financial year results, including a contract win with Nippon Express and new product releases for the 2025 financial year. Brambles also delivered a strong performance, up 33%, as it navigated the challenging consumer environment and announced a $500 million share buyback program. Infrastructure provider Ventia also benefited from new contract announcements and increased confidence around its $17.2 billion work in hand, finishing up 21.5% for the quarter.
Despite the challenges and uncertainties, we remain cautiously optimistic for the year ahead. Inflation has fallen considerably and continues to trend lower, and we believe the 2025 financial year presents a favourable market environment as interest rates move lower. Furthermore, we're closely watching the highly anticipated US election in November and will continue to monitor geopolitical events as they unfold and adjust the portfolios accordingly. As always, I encourage you to reach out to your Cutcher Neale advisor with any questions or to arrange a meeting, and we'll see you in January for another quarterly update.